Welcome back to Be Rich. After Namakkal, my team decided to do an event in Vellore. We have familial connections with Vellore. My father went to college in Vellore. He attended the Wooders College. So we are doing an event in Vellore on the 20th and 21st of July. Those desirous of attending this event should contact the WhatsApp number given below and send a message to the Gmail ID that is also given. Try to call as early as possible to avoid rush and disappointment. Because in Namakkal, we had to decline a lot of people who wanted to attend the event. Once again, I thank you for supporting BRIDGE. Good evening and welcome back to BRIDGE. My good friend Sashwath is here today and has a very interesting topic to discuss. And the Chinese economy is not doing well as we have seen. And the Chinese stock market is also at record lows. And what I saw recently in Bloomberg is that the government of China is not allowing people to short stocks and is trying its very best to keep the market up. The Chinese markets were at one time near their 20-year low. It went up and then it started to fall again. China is, in my opinion, beginning to undergo what is happening in Japan or what happened in Japan till recently. It has a declining population, very low consumption, and was factory to the world. And today, nobody wants to buy Chinese goods. Especially, you can see the kind of tariffs that the Americans and the Europeans have put on their stuff, on the Chinese products. And with China supporting Russia in this war with Ukraine, things have become more difficult for Xi Jinping. But that is not what Sashwath is going to discuss today. Sashwath is going to discuss what is happening in the Chinese bond market, which is normally very opaque market, and not much is discussed about the Chinese bond market. It's tightly controlled by the People's Bank of China, in fact, by the Communist Party. So Shashwat is going to discuss on the Chinese bond markets. Shashwat, what do you have for us on the Chinese bonds?
So, China has gone into a bond buying frenzy. Billions and billions of dollars are being put into Chinese bonds because China tightly regulates their exchange currency. So, it's difficult for Chinese domestic investors to park their money abroad. Although there are workarounds, and rich Chinese nationals have figured out how to take their money out of the country and place it abroad. But this is not a luxury which is afforded to most other Chinese citizens. So, the enormous amounts of savings which China has, especially because of their positive trade balance with other countries, has meant that China needs to park that excess money from their trade balance in their capital account. And what do I mean by this is that their money has to go somewhere, and that money either goes into domestic investments, which will then prop up demand, or it goes into unproductive assets like gold or external investments that is outside the country. But we've already seen that China doesn't or is very strict on how much money can flow outside the country, especially because they want to keep their currency slightly undervalued to promote their exports. So, what we're seeing Chinese nationals do now, especially during a property crisis, a real estate crisis, is that there's price deflation. And because there's price deflation, as he had said, equity markets aren't doing so well. And because equity markets aren't doing so well and real estate isn't doing so well, Chinese nationals have two routes for them to invest. They can either invest in gold or they can invest in bonds. Gold, of course, is something which Chinese nationals can invest in. But as most of us know, there's only so much you can invest in gold without it becoming a huge burden to keep and store. Especially if you need an income from your investment, gold is not the place to be because golds do not give you a yield every year. However, now we get into Chinese bonds because given that China is now deflationary, and Chinese bonds come in at a time when they're giving you positive real return, most Chinese nationals are saying, okay, I'm ready to take up Chinese bonds. And this is concerning the People's Bank of China because they want to tightly regulate their interest rate and keep it at somewhere between 3 to 3.5%. However, what we see has happened is that these 30-year yields as well as 10-year bond yields have fallen to record lows. Because they've fallen to record lows, the People's Bank of China has been setting out announcements from since early this year saying that they want to sell more bonds in the market to control the interest rate. They know that there's a demand, and if you increase supply, obviously the yield on those bonds will go up. And this is what they were planning to do. Now they have tried to put their plan into action, and they've now announced that they've talked to many different institutions and have arranged for $700 billion worth of Chinese bonds to be unleashed onto the market periodically in order to slowly tick the yield up. They were hoping that just by announcing this, the market impact will make sure that the yields will go where they want it to be. But very soon, within 2 months of the announcement, the yields went back down to where they were because people thought People's Bank of China was bluffing. Now, because they announced it, they have to follow through on their threat and they have to release something and take some action. This is game theory 101. And we see the People's Bank of China mobilizing to take some action. Hey guys, I'm going to quickly interrupt this video to announce that we have successfully launched our Substack, where we talk about companies, US markets, European markets, and Japan as well. And these insights are going to be delivered straight to you to your email as well as the Substack app. We hope you go check it out. The link is moatinvesting.substack.com. The link will be on the screen right here and also in the description. Thank you for checking it out. However, this might be detrimental given the fact that their economy isn't performing so well. To have interest rates tick up seems to be a recipe for disaster, especially when you're mopping up all excess liquidity inside the Chinese economy. Whatever is left, you're mopping it up using these bonds which now you're putting into the market. And this is only going to harm your already weak economy more. We saw the Bank of Japan do something opposite to this by setting a ceiling on the yield, whereas People's Bank of China wants to set a floor, and they're doing it at possibly the wrong time when they should be stimulating their economy. The Chinese Xi Jinping especially has been extremely critical of the Chinese real estate market, and he said many times that those who are corrupt and those who have propped up the real estate market need to be punished. However, whether this is a tenable strategy is something we'll have to wait and watch. What do you think about this?
I think first thing is the fact that the yields are going down means interest rates are going up. That is, bonds are becoming more costly. There is a shortage of bonds. There's too much of demand. People are falling one over one to buy it, and therefore yields are going down. And that means interest rates are taking down.
Yes.
And there is more lenders than borrowers in the market, which means that there is no place to invest and the people are not willing to consume. And this is the reason why the gold market in China is also very strong. While Europe and in America, gold is being withdrawn from ETF at very high rates. The Chinese are pumping more money into gold. Not only is the central bank doing it, even the retailers are buying gold. The Chinese savings has no, it has to find some place. They are unable to find some place. And because there is no consumption, most of their factories are not operating at below capacity. That is why you are seeing them dumping steel in India, and the Indian steel makers are complaining. And the electric cars are being dumped in Japan, in Europe, in America, and especially in West Asia. If you see, there are a lot of Chinese cars. So the Americans and the Europeans have sanctioned them. So overall, China has a wall of money that is coming through from export surpluses. Unless consumption picks up, Chinese economy will not do well. And for consumption to pick up, the Chinese Communist Party has to let go of its iron grip in the economy and people. But the problem for China is if the Communist Party loses its grip, it feels there will be political instability, like what happened in Tiananmen Square. So it's between a hard rock and the devil kind of story. But what was a virtuous cycle has been disturbed by Xi Jinping with his ambitions and is really affecting China now. China has got into an axis with Russia, and the West, which is the biggest customer for Chinese goods, is not willing to take Chinese goods, which in turn will mean that the factories in China will not work, which is a negative feedback cycle. And at this time, they have a declining population also. And this is not the place the Chinese should be in. And what the Central Bank of China is trying is to, by pumping bonds, is trying to suck out the excess liquidity, which will mean again no consumptions. Instead of allowing marketplace forces to do their job, the state is trying to control it. It may not work. Like in America, the moment the money went out of financial system, inflation shot up. China is also having its own problems with these. But China's problem is the exact opposite of the American problem. America has too much consumption and China has no consumption. Chinese problem is similar to Japan. But Japan is what you see is what you get. Whereas here, what you see is not what you get. You don't even know exactly what is the population in China. And this is exactly the reason, even though Munger kept betting on China, I neither touch BYD nor did I touch Alibaba. So if you like this video, hit the like button of this video and subscribe to our channel. Turn on the bell notification so that you get notifications whenever I put a video. If you like this video, send this to your relatives and friends and have them take a look. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.